Now, China, I know, has built quite a strategic reserve, and I think they use it to try and control the market. Then there comes a point where it's absolutely pointless them throwing cheap silver onto the market to try and keep the price down. Right, then the moment China is out of the market, I mean, the price, I think.
Join our WhatsApp channel for real-time updates, breaking news, and expert predictions on gold, silver, and financial markets. Link in the description or pinned comment. Stay ahead of the curve. Don't miss out.
Investment managers and the whole system are all part of, doesn't actually understand the difference between money and credit. The closer they get to it, perhaps is, well, gold is rising in times of trouble or something, but they don't really understand why. The reason that gold is rising, basically, I think, is because of a squeeze on the market. It's a squeeze on the market because there is just not enough bullion, if you like, to support the huge great mountain of derivatives, and that's beginning to topple over. I think when it comes to silver, of course, we all look at silver as not as a monetary asset, but as an industrial asset. I mean, everybody's been talking about the supply deficit that's over the last 4 or 5 years or however long, surely that's got to come through because silver's got this quality, that quality, and everybody wants it. So why isn't it going up? We should buy it, and it's sort of thing. But I mean, they're not looking at any monetary use for the currency. And I think as proof of that is the gold-silver ratio has fallen from when it was used actually as money, small change under the British. Well, I say small change. It was up to 40 shillings under our old gold standard. It was legal tender up to 40 shillings, which of course now looking at a sovereign, which was there's the equivalent of 2 sovereigns, so that's 1,200 quid's worth. So, which is interesting. But I mean, the point is that at that time the gold-silver ratio was in the order of about 15 times, whatever. And now we're 100 times, which tells me that there's absolutely nothing in there at all in terms of pricing it as money, if you like. It's got no monetary role as far as the market's concerned. Now, that's not entirely true as far as we're concerned in a credit crisis. And so I think that moneyness, if you like, is going to begin to shine through at some stage. And in that article, which I published today, looking at the markets, the technical situation actually looks very, very good if you look at it. I mean, if you've been holding silver, you may as well have held copper. They've done exactly the same thing, fallen out of bed big time. And you think, oh, God, that hurts. But actually, if you look at the chart, it's just come back and it's testing, or it's tested a support area, which looks like holding, like the top end of a 4-year consolidation. And any chartist will tell you, well, this all looks good, it's intact, and it looks like it could be off to the races. So we'll see. I think silver is very interesting. I mean, when everybody else is so bearish, it's someone once described it as a puke point, which I think is a sort of fair description as far as most investors are concerned. They feel absolutely sick with the performance. That is the time when you buy. Yeah, well, the thing we don't really know, and I'm not sure that the Silver Institute knows when it puts together its tables, is the sort of strategic reserves. Now, China, I know, has built quite a strategic reserve, and I think they use it to try and control the market. There is sort of evidence that that is the case. Now, if I'm right, then there comes a point where it's absolutely pointless them throwing cheap silver onto the market to try and keep the price down. They may as well hold on to their reserves. And I think we may well be seeing that point. Now, if that's right, then the moment China is out of the market, I mean, the price, I think, should take off. So it's going to be interesting to watch. Well, I think it's quite likely. We can't know for certain. But I think there is a broader question now that you've got Trump in there, and you've got this tariff policies and all the rest of it. From the point of view of foreign investors, foreign holders of dollar assets, treasuries and corporate bonds and also equities, there's not much point in buying any more. So, given that quite a lot of government's funding has depended on foreign demand for bonds, this, I think, creates an immediate headache. And this is why Scott Bessent, I think, turned around and told Trump, look, you're going to bankrupt us if you go on this rate. So, you back off, mate. And I think that's basically the conversation that occurred. So, as far as the future is concerned, I think what we've got to look at is what level of interest rate is going to encourage foreigners to hold on to dollars. Now, effectively, the foreigners will be looking at the dollar, and particularly since it's broken down against all other currencies. I mean, the trade-weighted chart looks absolutely frightful. It's broken down. They know this. The reason they've been buying gold is because they've been selling dollars. I mean, so that foreigners are already attuned to this. When I say foreigners, I mean the central banks, the sovereign wealth funds, the really big money which is close to government, which is part of the debate, if you like, in whatever country at the highest levels. They know this has been happening, so they're not going to buy. They're not going to buy unless they get a return which is commensurate with how they see the purchasing power of the dollar dropping. They're going to need it as compensation. But the problem is that the higher interest rates go, the worse it is for the US government, because they're in a debt trap. And the debt trap is even more stark because as a result of President Trump's tariff policies, there is absolutely no doubt that the US economy is going into recession. And I would actually go further and say it will slump. Now, if that happens, then the tax base to cover the constant accumulation of government debt, as is, apart from the additions to it from the budget deficit, is just not going to be there. And so they are in a debt trap. The debt is accelerating faster than the ability to pay it off, or to just control it, if you like. Foreigners know this. They're not stupid. And this is actually why gold appears to be rising. It's not so much gold rising, it's the dollar going down. It's foreigners getting rid of dollars. That is the key to understanding what is actually going on. So interest rates and bond yields, I think you can kiss goodbye to lower interest rates in 2025. And as soon as the markets realize this, there's going to be all hell to pay. Well, basically, all their goods are manufactured abroad, all their decent goods. I mean, what they do in America isn't really all that great quality as far as consumers are concerned. And the idea that, he's backing off for 90 days on everybody else other than China doesn't actually change it at all, because the problem is that supply chains use productive capacity